Hi there, hello everyone. Today I'm going to present before you CPI, Consumer Price Index, and the Forex market. This is a very fundamental concept in our fundamental analysis, and CPI is a very important economic indicator. So let's see what it is. So what is CPI? CPI is the Consumer Price Index, and that measures the monthly change in prices paid by the US consumers. And the Bureau of Labor Statistics calculates the CPI and then publishes it. There are two types of CPI, core CPI and headline CPI. I have explained that in detail in my another video. So there's some more detail about CPI. It is an inflation indicator. The CPI is one of the most popular measures of inflation and deflation, and which is closely followed by economic policymakers, financial markets analysts, businesses, and consumers. And how to calculate CPI? CPI is actually a weighted average of prices for a basket of goods and services representative of aggregate US consumer spending. And what are the survey indices of CPI? The CPI is based on about 94,000 price quotes collected monthly from some 23,000 retail and service establishments, as well as 43,000 rental housing units. So these are all the survey indices of CPI. Okay, Consumer Price Index. When the data release comes out for CPI, and when we look at the figures, so if it's actual figure, the actual greater than forecast, then it's good for currency, and the figure, if it's actual smaller than forecast, it is bad for currency. And it is released monthly. The CPI data is released monthly, about 16 days after the month ends. And this CPI data is categorized as red news on Forex calendar. That means that it will have its implication on Forex market either positively or negatively depending on the data release, what it tells us. It may tell us about positive news, or it may tell us about negative impact on Forex market. Okay, some more detail about CPI Consumer Price Index. CPI is a major indicator of overall inflation, and CPI and interest rates are closely linked with each other. Like rising CPI leads to higher interest rates, they are directly proportional with each other, and then falling CPI leads to lower interest rates. So they directly affect each other. And then CPI is such an important economic indicator that it also contributes to the gross domestic product and also the economic data. So if the economic output is positive, you will see that the employment is high, and if the economic output is negative, you will see that the employment is going down. So you got to look at it as part of your Forex analysis. So what are the CPI outcomes? So if the regularly falling data figures of CPI, they may indicate that it's showing a weakness in economy and the risk of a possible recession. And if there is a CPI consistently robust and strong data on a monthly basis, that could show a strengthening economy and an upward movement economy. Okay, so analysts are actually looking at the forecast or the predicted figures ahead of the CPI announcement. So what happens when the CPI data comes out? So what is the output of that data? So for example, if the CPI data is out, then it could be above expectations or below expectations. So in either case, there could be a positive or negative effect on US dollar and US dollar driven markets. So what could be the possible outcome of the output of CPI data? So if CPI data is better than expected, then we can see there's a strong US dollar versus other currencies. And if CPI data is lower than expected, then we can see weak US dollar versus other currencies. Okay, and what is there in it for the Forex traders? So for Forex traders, trading the data can be an important yardstick for analyzing their spread betting and CFD strategy, contract for differences. And what could be the possible trading strategies for Forex traders and how they can trade the CPI data. So remember, when the CPI data is out, there could be a possible volatility in the market, so that based on the data release, the market could go up and down very easily, and then the forex traders can trade into profit and also trade into losses as well. So you have to look at the data carefully and then tailor your strategy accordingly, so that you get the maximum benefit out of your analysis of the CPI data release. Okay, so that's about it, guys. I will stop here. I hope you liked the video. I will see you next time. Have a good day. Bye bye.